Okay, so this is a correction for day 3. If I'm not wrong, then we broke down levels and price behavior. So I'll try to explain every single move here with what we already know. Let's start with the first one. So I think the default time frame H4 is the best for default, but we can also just go to daily. So we are breaking down this move number 1, and let's see. So before we look at the move itself, one habit that we should learn is that you want to do analysis from external to internal. Like you don't want to start here, right? You don't want to mark the price behavior and then look for something on the left. But first you want to start from this high, this low, and see like where price is coming from so you get the correct context. Right now, this high is coming from a trap. So you see right here, it's not exactly from the OB, but this is the trap. So we are still reacting to it. We could say that we are sweeping, let's say, equal highs here, right? But that doesn't help. So there's nothing, I guess. But wait, let me check if this is part of the homework. My bad. And I think it's not. Yeah, but even if this was the full move number 1, then price is just reacting from a trap. It's maybe sweeping like some illiquidity here, but it's nothing major, right? We could expect a reaction, and there's also no price behavior. So price making high, and then breaking down, but there's nothing behind it. So there's no liquidity from the left, or no major liquidity. There is nothing on the price behavior, meaning this high will eventually become weak. And because we don't have any liquidity here and on the left, we just sweeping equal highs. It's nothing really big. We're just reacting to a trap. That also means that we are not bearish, that we are not starting a bearish trend, right? Maybe a small pullback, but on the grand scheme of things, we are still bullish, meaning we could still use demand zones, right? For example, when I see this demand zone, this POI, of course, my first thought will be that it's going to be a trap, mainly because there's no liquidity on the zone. But then price gives you a nice price behavior. So you have this low, high, low. We broke structure to the upside. We had a fake break to the upside, and then a stop hunt down. So this was the inducement. We had price behavior. Our level was just simply a mitigation, a demand level, nothing crazy. So we didn't have any major level for the trade. Then we had a sell, which is here, the second one. We are still reacting to the same trap, right? We did not break the trap. Now we are analyzing this high. Well, this high is not major, right? It was just a sweep of a high, nothing crazy, right? But nothing that we could expect a swing move till the next low for, because this high is insignificant, basically. The main structure for me is still like this. If we zoom out, looks fine. So what's happening here? We don't have liquidity from the left. We are just sweeping extreme of the high. But one mistake I saw was that many people mark extremes from the left. It's not a good idea. Extremes are usually used just for continuation. Okay, so we are just sweeping this. I mean, we are just mitigating this high. This extreme liquidity is nothing major. We can also see how insignificant it is, right, compared to the whole move. So our only liquidity is this high, which is insignificant high, which doesn't help us much. So we don't have a liquidity level. We have additional liquidity that is not enough. It's just an addition, an add-on. Then we can go to, oh shit, H4. Oh, I should have done the setting thing. And you see, we are just breaking high and low, right? And because of the lack of liquidity, we could also say that we are reacting to a PDC. So this is something you could see. You could add to your analysis now. And let's say this high right here, this low right here didn't react to anything either. So nothing. There's nothing more that you can add to this analysis. So let's continue to the next one. I'll put this replay here, and let's see. So what this low reacted to was a daily extreme, which is here. But you see price took it and failed, right? So we should add an additional level to that, which was a daily FVG. So again, we are still in a bullish trend. We are just reacting to a trap, meaning we are not starting we're not expecting any major reaction, any major pullback from this trap, right? Major means that it would break structure or something like that, but it didn't. So this would be our levels. Daily extreme, this is when we would start looking for buys. And then of course you go to H4. So you'll see the same thing as before, right? We have a trendline breakout, an F-pause, a stop hunt, and price continues. So I guess this should be done really easy. Now let's go to the next move. Next one was the biggest sell in 2023, the biggest move. And here, you saw how big the last two moves were, right? This sell right here and this sell right here. I mean, it was pretty big, but none of those broke structure to the downside because it didn't react to anything important. But this high did react to something important. Here you see that price closed on Friday and it opened on Monday here. So this price level right here, then price tried to fill it, which it failed to fill completely, meaning this whole gap right here is a weekly open gap. So we filled that gap perfectly. Now we are reacting to something major. We're not just selling off a trap. And this reaction should naturally be way bigger than this move and then this move. And you see, it was almost double the size of the moves. For price behavior, same thing. We had an F-boss to the downside and a stop hunt. So up, higher high, lower low, higher high, real breaker structure, and price continues. Okay, so let's go to the next one. This one was beautiful. So first, again, you start with H4. You see H4 is too messy. You go to daily. Daily is also too messy. There's too many lows to choose from. You can go to weekly. Weekly should give us clarity. And here you can see that price reacted to the last structural point of this whole buildup, right? So this is your high, low, high, low, high, low, high. It could have been the first structure. I would say a buy there would be valid. And the moment price took the second structure, we would be reacting to something random. So for example, you can avoid a loss here. And then price again takes something valid, the last structural point, right, of the build-up ALQ basically. So this would be the last liquidity point. Then you go to H4. You could also use try daily. Daily didn't give any good information. So you stay on H4. On H4, you see a major trendline breakout, big F-boss that aligns with the breakout. And again, the stop hunt into the weekly low here, right? And price didn't buy here because it was Asia, and price took out Asia low, and it exploded. So I think that's it for this move. Really simple and beautiful. For continuation, you can also see this ALQ right here, or this last structural point right here. That also happens to be a break and retest. Oh, very easy. If you want to add more analysis, you can. For example, this would be equal highs, meaning this would be a trap with subjective liquidity. Price sells from a trap, and the next day you would be looking for a buy, right? So there could be a buy here, there could be a buy here too. Well, let's see. Or it could sweep this on twice. It's also an option, yeah. So then you had a fake buy to the upside, a stop hunt, and then you can even zoom in, right? This wasn't the homework, but I'm just showing you what you are capable of doing right now. So you see a big F-boss to the upside and a stop hunt to the downside that aligns with the structure. So really nice. Let's go to the next one. So let's go to daily. Yeah. So next one was this sell. First thing that you would see is, oh, there's this stop hunt right here that we are sweeping extreme. High resistance liquidity, a strong high, but the C price failed to sell from it. If it took it out again, we could still say that we are selling from this high resistance liquidity, but price went too high and it reacted to this trap. So again, it's also a strong high, but now we're in a bullish trend, right? We don't have any evidence that we are reversing it, meaning this would be a context trap and a strong high. So we are bullish, and this is a previous leg. So price reacts to the strong high. Of course, there was no price behavior for this high, right? Meaning this high in future will be a trap or a weak high. And this would also mean that this high is a reactional trap. So there was nothing for this high. For this low, we had a rebalance. So it was like a daily rebalance right here. On weekly, it would be a weekly APG fill also. So that's enough. And then you go to H4. So first thing, you would ask if there is any liquidity. There is not. So we had price behavior to compensate for that loss, right? So we had an F-boss up here. Although we already rebalanced, F-boss up, inducement down, stop hunt down for the buy. Let's go to daily. Let's break down the next move. In this case, we are sweeping the high resistance liquidity. So it's our first sweep. It's worth a try. We had big major F-boss on the daily and the stop hunt on daily also. right? Also this nice build up to the downside, a breakout to the downside. We even had a break and retest. Oh, so we induced even more people for a sell, right? And all the liquidity is resting here that aligns with our liquidity level. Now, why would we choose this high? Out of all three highs, we could find more confluences if we went to weekly. And you see the high resistance that we marked aligns with a weekly FEG or BPR, right? So we are reacting to this. We're filling this. And that's why you could choose this high instantly out of those three because it has more confluences. So we filled weekly gap, weekly inefficiency. We serve this high resistance liquidity, and that explains this sell, this big sell. Now let's go to the next one. This one was tricky because we set this big daily low, but we said we don't want to use a break structure like like whenever we break structure on high time frame, we don't want to use that as a level. We want something from the left, right? An additional level to this low. So that's the reason why we don't, for example, buy from here, or we don't sell from here. We always want something that aligns with the level more. So this was the main level, but we want something to align with that. We go to H4, and we had news here. So we had a pullback and big explosion to the upside, right? Meaning this low would be our momentum liquidity. It took it out, and we also had a big weekly structure aligned with that. So that's why we have this buy. Price behavior, there was not any good price behavior. It was just a bearish flag. So we lost sellers, and then we had an additional break and retest for a sell that pushed even more people to sell into the level. So we're absorbing all the buys here, resulting in this nice bullish push. So let's go to the 10th move. Nothing crazy. We had these equal highs. So every time you mark equal highs, make sure that you don't do this mistake. And that is that people mark, for example, this as equal highs, this and this. The problem is that we only mark equal highs from the previous leg, right? Or in the current leg, we could say, oh, we have equal highs here. You see and go, but not from both combined. So we cannot mark it like this, like this, for example, and then see this as a trap. No, because we have a reversal here. So this is one leg, this is previous leg, this is the current leg. And with those equal highs, we have a trap, the nearest POI that you can find, which is this. You see how price consolidates here? This is the last consolidation before the big push. So this is the last supply. And this supply has equal highs right below. So we are reacting from this trap. This is the main level that we are selling from. And price behavior was easy as well. We had news here, so you don't really see structure, but this was an H1 FBOS and H1 stop hunt. So a very nice sell. If you wanted to add more analysis, this would be equal highs. And with this equal highs, you have this trap. And then, for example, you can even break down this buy. Where did this buy come from, right? Or where did this buy come from? For example, this one came from an opposite rebalance. But in the last call, we said that if price is reversing, then the rebalance from previous leg is not valid. So for example, you see this reaction, and you could use this to your advantage. You could use this information to your advantage. So there is liquidity aligned with that rebalance, but we're already bearish, so this low is weak. And the next day you would trade into that low. And for example, here you see this is the big push to the downside, meaning this is the momentum liquidity, the momentum trap. The trap gave you a little FBOS to the downside, right? So this would be FBOS. So price went up, give a reaction from the trap, give a fake breaker structure, and then it stopped out the trap and the induced sellers, the early sellers. That's why we sold here. So that's how you can explain these moves. And then what happened? Price took out ALQ from the left. Okay, so let me do this. I think price took out ALQ. Yeah. So we had a trap also. This would be a break and retest. And this trap also had equal lows, right? So it is a trap with subjective liquidity, basically. It was a break and retest structure. We are sweeping this trap, and we bounce back, we give a reaction. But that's going too far. I'm getting too excited now. So let's go to the last three moves. Yeah. Okay, so we had this sell. This sell was a sell from equal highs. So you see, we had equal highs. We said we don't swing sell from equal highs. We don't trade, we don't swing sell, meaning swing in this case means a sell from here till the next structural point. right? Swing for me doesn't mean overnight trade. So there could be a small trade here, but it doesn't matter. Then we took that high out. But since we had equal highs from the previous leg, this could also mean that there will be some trap aligned with the equal highs. And you see, you had a really nice hidden base here, right? Hidden supply. So the supply gave you a reaction. The supply gave you this, let's say, breakout to the downside, this fake breakout structure, right? Additional breakout structure to the downside. And then all the liquidity is resting here that aligns with the trap. So that explains this sell. Okay, my bad. Wait, my screen is going crazy. Okay. So the next one. Oh, it should be like this, right? Okay, so the next one we had was a daily buy here. And again, you want to start on daily. The higher the time frame, the better it is. So here, what happened? We took out daily structure. We gave a fake reaction to the upside, right? So this could be a first breakout, break and retest. First F to the upside, again, break and retest. So you see so many strategies line up for buys. Since we're bearish now, or we could be bearish, this would be a trap. And also because this low was funded with minimum liquidity, there was no price behavior, nothing like that, right? We just at a short-term level, the momentum liquidity. What happened after? Price gave a fake breakout structure from the trap. Again, also some trendline breakout on H4 probably. And all the liquidity is resting below this low. But again, this would just be a breakout structure on high time frame. We don't want to buy just because of that. So we want another level that lines up with this low, which would be this structural low right here, right? Which would also be some break and retest. So we have daily structure, daily inducement, and that is what funded this big buy right here. And again, you can see how small this buy is compared to the whole move. If we are talking about entry price behavior, then we could also just go to H1 and have the same thing on H1. So there is some build up here. We broke out to the upside. Then you had this fake breaker structure. So I think this structure is pretty clean. And then we had a stop hunt and price continues higher, right? And what happens after price takes extreme? So we probably react to some FBOS, make an FBOS down and break up. Then we took out ALQ. So again, you see this bunch of build up, right? Price takes everything, then price takes extreme again. So the last structural point we have here. And then we also have something like that here, right? And in every single sweep here, you could have got a little buy. Let's go to H4. So the next trade we have was here. This one was easy as well. So we took out this high resistance liquidity, basically. It's a daily structure. Yeah, so you see price sweeps liquidity, sweeps it, goes down. So we are reacting to this high. But again, we went to this high with momentum. We didn't have any entry model, any price behavior. So for example, if we caught a sell here, we wouldn't swing that sell, right? We would probably just take out this little wick, target this little wick, but it's not for a big sell, for a big swing sell. So what happens? We had a build-up. We broke out of the build-up, creating a structural low. Then price went down, creating a structural high. So we had an FBOS. And now this move also could have been funded by something. And just go to weekly. And you see price filled weekly FBG right here. Right? So just an additional information. But that's how easy it is to catch these trades. Then price reacted to that, took out the inducement high. So this is where all the stop losses are. So all the stop losses here. This high was insignificant, but because we had this inducement to the downside, it makes this high significant, a significant level to sell. So this was our main level. This is how price interacted with the level. And we had perfect price behavior, making this sell possible. And that's it. As I said, because this video will be really long, I'll just try to split it in two. So that's the first half.